Well, what can investor sentiment tell us about where the market might be heading? Today we're going to take a look. Stay tuned for Prudent Money. Good afternoon and welcome to the Prudent Money Radio Show. I'm your host, Bob Brooks. Thank you so much for joining me today. You know I do appreciate it. Well, if you have a question for me, please go to the website at www.prudentmoney.com. Send a question into the Ask Prudent Money section, which is a link that you'll find at the top of the page. And once we get a hold of that question, we'll get the question answered for you or get you point you in the right direction to a resource. However we can help you out, we want to be able to do that. And I got to tell you, I am so very excited about something we're fixing to roll out. Probably know something after around the 4th of July weekend after that, but it's something that we've been putting a lot of work, a lot of time into, and I think really meets the deficit that we face today of good financial resources, information you can count on, learning about how money works, all in one place. So we'll keep you posted, but definitely we'll be rolling that out in a couple of weeks. And once again, really looking forward to it. Hey, if you didn't get a chance to listen to yesterday's program with Chuck Bentley, I would encourage you to go and listen to the podcast because we do podcast every program. And you can find it on Apple, you can find it on Spotify, or really any major podcast platform that you consume information about about various topics. So Chuck had just a great look at, and I thought one of the better definition or kind of explanations of what might be going on in Washington. As I started the program, I said, I got an interesting question today, and it was along the lines of World War III. We talk about that, mention that in passing, maybe not talk about it a whole lot. Now we've been talking about it, not we on the radio program, but there's a lot of chatter in the social media space, and Chuck, who is the CEO of Crown Ministries, phenomenal ministry. They reach people for the kingdom and help people all over the globe. He'll tell me that he just got back from Africa or some other exotic place, not to go on vacations, but to work and to spread the good news and what they do there at Crown. And so, I feel very, very blessed that he gives up his time and comes on the program once a month, and we talk stewardship. It's always a great time. Yesterday we talked about tithing, which is not what I'm the purpose of talking about this. But if you get a chance, listen to the whole thing. I think you'll be extremely blessed. But this is what he said about my question. My question was, Chuck, if you have Iran and Israel in a full-out war right now, and then what if Trump decides that we should jump in there and help Israel and take Iran down? I'll be the first to admit I've been very critical of his decision making. I thought the initial decision making to arm Israel with our weapons and state of the art technology, and let them fight the battle for us, or for them mainly for Israel, but also to include our part of the arrangement, it was a good decision because we've got all the technology and the weaponry, and we should be able to supply them. As if I know, pure speculation, which gets to the pure speculation I think that we have a tendency to run by when something happens that we don't necessarily agree with. But Chuck started to talk about something that is so very true, and he said that the bottom line is we don't know what President Trump, his cabinet, the people in the White House, the administration, we don't know what they know. Yet we act as if we do. And I'll sit there and think about some of the things that I'll say as if I know what's going on. I don't know what's going on. None of us know what's going on. We don't have the clearance to know what's going on, and for obvious reasons. So that's at the point that you have to trust your commander in chief in a all-out war situation. Chuck is a very, very positive guy, and I heard a lot of concern in his voice that I don't think I've ever heard, and I think that it is a very dangerous situation where if we and here's the thing is that Congress is trying to get some type of a legislation or bill. It's not. It's a smaller version type bill to get it passed to keep the president from declaring war or doing any. I think it's if I understand it correctly, doing any type of act of war without having Congress's full support. Well, which I get that, and then in some cases I don't get that because we obviously, when you got to move, and these things happen. So these critical situations happen so fast. So that would be concerns that he's going to feel rushed, but in taking some action that needs to be taken. But the bottom line was we have to be able to trust what he sees that we don't see, and just pray that he makes the right decisions and has wisdom. And we've got to remember to do that. And I say that to myself before I say it to any of you. We've got to remember that it's important to pray for the president and his advisors, and that they do make good decisions. But not a very easy situation. I do personally think if we go in there and take that nuclear bomb out or do something that's big, that Iran, of course, they're threatening. They threaten severe consequences, none like we've ever experienced. Whether they can carry that out or not, who knows? But bottom line, kind of rambling at this point. But the bottom line is we've got to trust their decision making because they see things we don't see, and that is a tough one. And so once again, just remember we got to pray for our leaders and make sure that we pray for wisdom. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thanks so much for joining me today. I do appreciate it. One of the things that is important to watch is something called investor sentiment. Basically, it comes down to how do investors feel about the stock market, and how do they feel about the possibilities of they put money in today that there's going to be a good chance of a good return. And you can see this happen in most bear markets where there's these big drops, and then you start to see people pile in because they think it's the bottom of the drop, and then then the market drops another 25-30%, and they get burned. Surely that was the end. I mean, put more money into it, and so it's like on the way down, investors, they have various levels of sentiment about confidence, said another way, that everything's going to bounce and come back up, everything's going to recover, and everything's going to be good. And I might even be getting great timing on this situation. So Bank of America has a survey that they release, And want to go through some of this with you because I think it's invaluable information to kind of see it through a different lens. It says Bank of America's latest survey reveals a significant shift in investor sentiment. Anytime you hear that word sentiment, just think of the word confidence instead. Investors see the end of U.S. stock market dominance shift focus to global opportunities. Just straight off the bat, you typically see in these types of reports, as a group or as a whole, investors making uh, questionable decisions. And I think this is the first questionable decision of the survey is that it says the survey reveals a significant shift in investor, what's called confidence, with global fund managers. So the whole idea is I'm going to stop investing my money in U.S. stock managers because over the next 5 years, they're going to either underperform or not perform very well. And I'm going to shift to global opportunities and other countries and that type of thing. Here's something to keep in mind, and I feel pretty confident that this is a correct statement because it has been in the past, and I don't see any reason why it wouldn't be at this point. If people, if the situation got bad enough that the market fell into a full blown bear market, was dropping 30, 35, 40%, and a lot of chaos, a lot of investor um, fear going on, that type of thing, then I would suggest the same thing would be happening in global stocks, just like they are U.S. stocks, because you got to keep in mind something that everything is very very well connected. I got to take a break, but we'll be back with you. We'll talk through this. This is Bob Brooks. Stick around. I'll be right back. Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thank you so much for joining me today. You know I do appreciate it. Hey, if you got a question for me, go to the website. When you get to the website, top of the page, you'll see a link to Ask Prudent Money. Just send an email, and we'll get you taken care of. All at the website prudentmoney.com. So I was talking about investor sentiment or investor confidence, or you could even say investor optimism. I think there's better words than sentiment, but that's another story. So obviously, the more positive investors are, the better off it is for the stock market because a positive investor sees or looks ahead and thinks they see opportunity and they invest going forward. In other words, they probably are investing making the speculative guess that the market has hit rock bottom when it probably hasn't. But like I said, the key to understanding investor confidence is that your main group of investors, which is the crowd of investors. Humphrey O'Neill talks about this in his book, talking about contrarian investing, which when everybody thinks alike, everybody's usually wrong, is the quote. I think I got that right. Pretty close if I didn't, but you get the idea. So in some situations, you really want to do opposite of what what investors will be doing. So what you see in a bear market, once again, use this real quick analogy, is the market falling and investor confidence actually going up that we're about to hit a bottom. And everything's going to turn around and everything's going to be over with. But we're about to hit a bottom, and that's when we're going to invest. Doesn't happen, it goes down again. Same thing, same investor confidence. And, it only takes you about 2 or 3 times to get beat up a little bit in the market or a lot in the market. And now you don't want to invest anything. That, believe it or not, is the best time to invest when investor sentiment or confidence is at rock bottom. Nobody wants stocks. That is the best time historically to buy stocks. May not make sense to you, but that is the way it works. A little twisted, I get it. So the market today, you have investors to this Bank of America's latest survey, excuse me, is that investors don't like U.S. stocks, but they love global stocks. What I would suggest to consider and be real careful of is the assumption that U.S. stocks, if they go down, money's going to flow out to global in other countries, global opportunities in other countries. It could be, but it generally doesn't work that way because what investors will soon find out is if things are not going right in the U.S., things are not going right in most other countries. So I would suggest that you're going to get more of the same. I can't imagine seeing a bear market play out in the U.S. markets and then the global markets see a bull market playing out at the same time. See, it doesn't even make much sense. Now, if they're cherry picking countries and cherry picking investments and like that and things like that, they could make a difference. But what we're probably seeing is this whole shift to a blanket global type opportunities situation, which I don't think is a good idea. It says 54% of respondents identified international stocks as the top performing asset class for the next 5 years, signaling a departure from the U.S. investment strategies that have dominated in recent years. In contrast, only 23% of investors still see U.S. equities leading the charge, while 18% lean towards alternative assets such as gold, government bonds, and corporate bonds. I have never, until just this minute, in 32, 33 years of doing this, ever come across something that classifies corporate bonds and government bonds as alternative assets. They're alternative assets it really goes with the name alternative. They're very different types of investments. Last time I checked, corporate bonds and government bonds were pretty mainstream. Gold is fairly close. I would almost say that's kind of in the middle of a normal investment and alternative investment. It says nearly half of respondents, 47%, cited the potential for a global recession triggered by the trade war as the most significant risk to markets. Once again, that type of situation is going to take everybody down, not just the U.S. It says they're also concerned about Federal Reserve tightening, the Fed coming in and raising interest rates. I don't think that's going to happen. I think it's going to be a situation where that if they don't raise rates, they're signaling that they're not going to ever lower rates. They're not going to lower rates for a long time. So the fact is, they're definitely not going to raise rates. Hope that makes sense. I can't imagine how bad that would be, and I guess things would have to be pretty bad for them to do it. So I see them waiting, and not the Federal Reserve waiting probably way too late to raise interest rates. So I don't think it's anything we're going to see in a while. This third one is a very legit risk. Rising bond yields. I'll just say it this way: bond interest rates. Fears of a credit event caused by a disorderly surge in yields threatening debt markets and corporate balance sheets. Put that into layman's terms for you, and I think this is something we want to park on for a second and talk about. I talk about this with the bond market. Remember, if interest rates go up, bond prices go down. And we've seen interest rates go up over the past 3 or 4 years and continue to go up, but not. It's kind of a controlled situation. Now, if the market starts to go up fast and aggressively, the interest rate markets start to go up to where you're paying 10% for a mortgage, just as an example. If you wanted to buy a car, it was going to be 15%, 20%. Interest rates just out of control. That would be a big risk because I think you would see a lot of destruction in the bond market, and the bond market is an enormous market. I think it's like 41 $41 trillion. I think represents the bond market or something like. It's not very far off. The stock market is not that much bigger than the bond market. So I think that's a legit concern. The other thing is and this is something the Federal Reserve Board talked about in their after their meeting and interest rate meeting, and for the press they talked about the fact that tariffs have not the risk of tariffs and the risks that the effect of tariffs has not hit the economy yet. It hasn't really gone into full blown. All that's happened is it's just been talked about and threats and that kind of thing. But the reality is it has not even remotely been factored into anything. That to me is a risk. Here's another one. Soft landing expectations rise. So the average investor who was surveyed for this particular survey, 66% of surveyed investors now believe the global economy will achieve a soft landing, avoiding a full-blown recession over the next 12 months. This marks a substantial improvement from April, when only 37% expressed such optimism. See, that just doesn't make any sense at all. It also undermines the credibility of some of these surveys. Why this even is even a legitimate question in here, because all of a sudden now everything is, as a group, investors are looking at everything as it's okay, and we haven't even, like I said just a second ago, we haven't even seen the full effect of anything that with these tariffs, and we've got this situation going on in Iran. And yet, everybody they expect a soft landing, no big deal. But just back in April, 37% expressed such optimism. So that's why I go through these, is to give you another look at it, a different opinion, and that way you can decide for yourself what makes the most, what does make the most sense. So yesterday, and I don't have much time, unfortunately, the Federal Reserve Board came out and gave their comments, or Jay Powell, Federal Reserve Board Chairman Jay Powell, gave his comments, and it sounded a lot more negative than it has in the past. There was a lot of talk about stagflation and that type of thing. We'll circle back around. I got a pretty full week next week, but we'll squeeze it in there somewhere and talk a little bit about this, because I think it's important to know what the Fed is seeing and what they're potentially going to do as far as interest rates. Right, as of yesterday, I think they're dead on track. Nothing surprised me about what they said. Surprised the market a little bit. Shouldn't have, but I think it's definitely in line with what makes sense, and what Jay Powell, the Fed chair, wants to do makes perfect sense. Hey, this is Bob Brooks. You got a question for me? Please go to the website at prudentmoney.com and send it in, because we are all out of time. Till we do meet again next time, keep the faith and have a great rest of the day.